We had inflation figures last week at 7%. I think most people thought the Reserve Bank would maybe leave interest rates on hold today. I was talking to my great mate Ross Greenwood, Sky Business editor, this morning. He thought that is what might happen, but it didn't. He joins us on the line. Ross, everybody was a bit shocked at 2:30 Eastern time today.
Oh, there's no doubt. And you could see that in the stock market, which immediately dropped by 1%. You could see it in the currency. It jumped by 1% back to 67 US cents. You could see it on the money markets in particular, where they'd priced in a 100% chance of no interest rate rise. And as a result, money market interest rates right across the board were higher. So this was the surprise, by raising interest rates by 0.25% to 3.85% after having left interest rates on hold last month, with broadly an expectation they might have waited another month before they really went back. But that inflation number that you talked about last week at 7%, it appears there was something in there that spooked them. And my suggestion is it's probably inflation in the services sector, which is much harder traditionally to get out of the economy. And I think they were a bit spooked by the extent of that inflation, and they just believed that really they had to start to move it. This rate here also says something as well. Tonight, the United States, or actually be tomorrow our time when we see it, is going to raise interest rates by 0.25%, which means its inflation rate on the right at 5% is going to be very close to its cash rate. But have a look at Australia there. Even after today's rate rise, 3.85% is the cash rate, 7% is the inflation rate. And generally, when there's an outbreak of inflation, central banks try and get that interest rate very close to that inflation rate very quickly. In Australia's case, however, we simply haven't done it, not yet anyway.
So, Ross, with hindsight, and makes it very easy, should they have continued the lift of the cash rate last month instead of having that one pause and giving everyone some hope that these rates were all over? And we're now at, what are we? We're now at the highest cash rate in 10 years.
Yes, that's right. So the highest in 10 years, but also consider that in the past month you've had big increases in the mortgage clearance rates on weekend auctions. And so a lot of people have gone out there thinking this was the last of the rate rises. Now, they were wrong, and they probably haven't read the message from the Reserve Bank Governor well enough, because they did indicate there was a clear bias to raising interest rates again. But you're right about the messaging here, because remember that the Reserve Bank of Australia was the last of the major central banks around the world to start raising rates. It was the first to start tapering rates by 0.25%, not 0.5%. And then it's also the first to have paused rates around the world. So it's almost as though they've got a go easy attitude on the rates as compared with others around the world. They believe it's different, mainly because of the propensity to fixed rate, or rather variable rate mortgages here in Australia. So they think that the impact of their rate rises so far has a bigger effect on Australia's households and economy than maybe in other parts of the world.
I know you always try and examine these things through the eyes of who it impacts on. I couldn't help but think today when I heard that the rate had gone up, and you broke the news on Sky, that if you were someone who was on the edge of being able to continue to afford to pay your mortgage, or if you were running a small business and you're on the edge of financially falling over, that sort of economic stress must be an awful thing to have to deal with.
A terrible thing. And remember that it's those people who have significant debts who have had change of circumstances. So the most likely reason always that a person loses a home is either because they're divorced or because a business goes broke. And so you're right to say that many of those who have got big debts could very much be troubled by that. And of course, there've also been significant falls in house prices. So it's those who are forced to sell under these circumstances who will be most affected. Plus also those people coming off very low fixed rate mortgages. The one thing that's saving most Australian families right now from enormous stress, and let's be honest, there is stress right throughout Australia's community because of these rate rises, and you can see it here. Say typical mortgage is $750,000 in Australia. The impact of those cumulative effects of all those rate rises now almost $1,600. So we're talking the best part of $20,000 after tax that family has got to pay in addition to what they were paying previously. And so that's where the stress comes from. And so, mind you, on the other side, the Reserve Bank, when it raises interest rates in these ways, is trying to reduce, if you like, the demand in Australia's economy. It's trying to reduce consumption. And so certainly at the edges, there are some people who do fall between the cracks when the rates go up as aggressively as what they have this time around.
Another change today by the government, they're now going to ask employers every time you get paid to put your super money into your super account. I think most Australians probably thought that happened anyway. Is this going to cause drama for small businesses? Is it going to be a pain in the neck?
Expect a backlash from the Small Business Society. I would think that Council of Small Businesses, and the reason for that is a lot of small businesses actually need the cash flow, and so they pay their super on a quarterly basis. The second thing is also the business does so much work for the government in terms of the red tape. The question is here, they're now going to be doing it literally every week or every fortnight or every month that they actually run a payroll. They've already been forced to actually pay other services to help run the single touch payroll service. That was a bit of an initiative, and all of this they keep on saying, we're going to take red tape and take government out of your lives. They just keep adding more and more, and this is just another aspect of that. So from that point of view, small business will not be welcoming it. Big business won't really care because they're already doing it, and so as I say, it's just going to be one of these points. But on the other side of it, there's a whole bunch of small businesses who in the past have not paid superannuation to their employees, and when they collapse, of course, that leaves those workers out of pocket. That's something the government clearly is trying to address.
Good on you, Ross. A big week coming up, of course, with your budget coverage, which we'll look forward to on Sky. With Ross, make sure you tune into Business Now. You can catch the program 4:30 Monday right through Friday, and, of course, Weekend Business right here on Sky.